Hey investors, I am Gustavo and this is the channel Building Financial Freedom. So what I'm bringing this week, stay connected because what I'm showing is very interesting. I'm buying two ETFs since August the 17th. I buy $7 every market day, which makes the same thing as I was buying $5 every single day of the month. So what I have, I will be able to show the fluctuation between those two different kind of ETFs, and I also want to explain what's about to happen with all this money sitting on the side, what's going on the last week. We are seeing a lot of changes going on, and I want to show you guys right now. Stay until the end and it will be very interesting. The first ETF that I'm buying, $7 every day, this SCHD, this Charles Schwab Dividend Equity ETF, is getting hit big time. Look, it's about 7% down on the last 12 months. So what happens here? People like this a lot because, as you see, the top 10 holders here, they're very traditional companies who pays dividends for a long time. So that's what they use. They use a method to kind of balance the performance of the stocks, and then they make more or less weight on their top 10, or actually on their total 104. So depending on the performance, use some metrics they have, they will qualify the stock to be heavier or lighter into the portfolio. It's very nice, but they still getting hit bad. But look at this. The other one that I'm buying every day, $7, is the VOO, the Vanguard. That one follows the S&P 500. So this one's about 14% up in the last 12 months. But why is this up 14%? This has the biggest 500 companies, right? But we have 7 companies here, which is the Magnificent 7. They are about $10.4 trillion into the total SP 500, which is 37.7. So this 10.4, these 7 companies together make about 27.7% of the S&P 500. What happened to these companies? These companies, they got hurt so bad. Last year, they lost about 39% of the value. Some more, some less, but the average between all 7, 39. And what happened? This year, they're up 71% combined. I know Nvidia is about 200%, Meta 140, 150, but combined they're up 71% since January 1st. So that's a big weight. That's the guys right here. The big 7 one here. Tesla, Apple, Amazon, Google, Microsoft, Nvidia, and Meta. Facebook used to be. So what happened here? If you buy S&P 500, the top 10 is 31.05%. So every $100 you put in S&P 500, $31 go to these first 10 companies here. Actually 9, because Facebook is double here. Facebook is Class A and Class C. If you combine both together here, they're close to 4%. So this top 10 is actually top 9. Here I have Berkshire Hathaway, which doesn't belong to them. And we have United Health Group, which also, those two, very traditional, long-time companies, they don't belong to the Magnificent 7. But these companies, when the money goes to them, to make a change in the percentage on them, because they're so big, it doesn't change as much. So with all that's happening at the moment, let me show you guys this. This is amazing now. A lot of people are putting their money into those money market accounts. It's so many. It's a lot right now. They're all paying close to 5% average. You can see banks and banks and banks and banks. I use Fidelity Specs Money Market. They pay 4.99 a year. But it's completely 100% liquid. That's a good thing because they do your balance at the end of the day. They count that balance. And they don't pay you, but they calculate. And at the end of the month, they put all those days for your ending balance and they pay you in one payment a month. But that's completely safe because it's not going to go down. It's only going to go up, that percentage, that whatever you choose. And that's another thing. Look how much money. It's $5.5 trillion. He says 5.7 on the US bank. That's last week. This 5.6, this is average around 5.5, 5.7 trillion dollars sitting on the side, just waiting. Waiting for what? Waiting for the confirmation that we are looking for, which the Fed will stop increasing, and even better, we start cutting rates. So we got the CPI 3 days ago actually, on the 14th, 4 days ago. And we are at 3.2 right now. It's a great number. They're looking for the twos, right? We are almost there. And that happens. See, on the last 12 months, we start from here. 1 year ago was 7.6. We hit 2.0. We hit right here in June. But what happened? After he hit here, we start going up again. So everybody gets scared. Oh my God, well, now we did everything we're supposed to do. Inflation hit the bottom and inflation is going up again. So now I have a kind of a confirmation here. Why? Because the unemployment's growing. People are buying less. A lot of places, instead of charging more, is charging less. You know, a lot of promotions and discounts going on. So that's a good sign. We're not expecting for them to cut rates the entire next year. That was here about a month ago or so too. Now we have 82% are about saying they're gonna start cutting March to April, which is a great news for the stock market. So we're just expecting for those $5.5 trillion start going into. But what I want to show you is this. You know, the money, when the money go into these guys, they're so big, doesn't make much difference. Imagine to move 1% in Apple. It's a $3 trillion company. So 1% is what? 3 trillion. It's a $30 billion. $30 billion to move 1% in Apple. But when all this money starts moving into the small caps, into the dividend stocks, which now they're in a great price, they still have great numbers. The price is good. When this money start going in, the percentage can go really big. So that's where I am looking for through my numbers. You know, this is not financial advice. I'm not a financial advisor, but from my point of view, these 7 big ones, they definitely they have their space in there already. They may be gonna go up a little. They may be gonna be sideways, but those guys, dividend and growth stocks, right now, when they start cutting rates, with all this money here on the side, because when you start cutting rates, that money is not going to pay you 5% anymore. It's going to pay you 2%. Then why they will keep it 2% if they can come into the stocks, and then we're going to get much more. So that's going to be the balance I'm looking for. You know, that I have some money sitting on my Fidelity, right? I said the money market specs, money market account. And I will show you guys here now what happened to my 12-month. Not 12 months. I will buy this for a year, but for now I only have for about 3 months. See, I'm paying every day basis $7, $7, $7, $7. So the market value for my account right now is $4.92. It cost me $4.75. So I'm $17 up and 3.5 up on the VOO SP 500, the big boys. Now let me go down to the SCHD. I will show you the spreadsheet all the week, every week. I will show how much it was up and down. Same thing, buying $7 every day. My market value $475.22. My cost $475.98. I'm just about less than $1. See, 76 cents on the negative side, 0.16. Let me show you this. Here we go. This is all the purchases when I started. August 17, but I didn't start counting until September 1st, and I count every Friday here. So see, this one is really just on the start going up a little, and that's when you see the inflation curving right there. And then when the inflation start going up, everything start going down until, see, October 27 here was my worst, 5.72 negative. The same thing, same week happened here, the worst, 6.8 negative. So people are desperate. They said, man, we put all this interest, the inflation went down, and now the inflation is just going up again. So what else we need to do? They did everything they could, right? But now everything's calming down. We can definitely see the numbers are getting better. See, 0.14, then 1%, then today closed at 3.5% up, and this guy started losing less. See, from 6 to lose 1 to lose 2 to almost break even. So that's what I'm looking for. I'm looking for to the Santa Claus rally, which everybody waits for the end of the year, right? When all the stocks people need to show those big, managers from those companies, they need to show some numbers, they start investing. And we're also waiting to see, because of this, the inflation's kind of getting a little more calm, so we can expect more people to get into the stock market. So I think that's all for today. If you guys can, just click here on this icon here and subscribe to the channel here, and click here to watch this video when I start buying my first $7 here. So the video here, and subscribe here, guys. Thanks so much for watching. I'll see you guys next time. Have a great weekend. Thanks. Bye bye. See you.